We're up 400% on our SOFI position in less than 2 months. Long story short, on October 15, I made a video about us buying SOFI's call options with an expiration date in April 2025 and a strike price of $13 per share. Back then, SOFI was trading at approximately $10 per share. So as you can realize, and as I already mentioned, we're deep in the money and we're up already 400% on this position. So the obvious question is, should we sell? Should we hold? Or maybe it's a good time to buy some more shares of this company. After some research, I answered this question for ourselves, and today I will share with you my analysis, my thoughts regarding the future price targets for SOFI and what we are planning to do with our investment. Hey there and welcome to the Market Monkeys channel. It's Julie here, and today's video I want to begin from recent updates regarding SOFI stock target price. JP Morgan recently raised their target price from $9 to an impressive $16 per share for 2025. From one perspective, you can say that SOFI is trading at approximately $16 per share already, so what is so exciting about that? First of all, let's see the range of prices that analysts are expecting from SOFI. And here we can see that we've got $4 at the low and $19 at the top, with an average of about $11. I must say that if a couple of months ago these valuations were okay, we could see where they're coming from, right now they seem a little too low. JP Morgan had their target price at $9 per share when the average was about $11. It means that JP Morgan was not the most bullish analyst regarding SOFI stock, and the fact that they not only raised their target price, but they raised it that significantly by almost 80% suggests that we can see a new positive trend among analysts in the near future. And of course, this by itself can be a positive catalyst for SOFI stock. If more and more analysts will come up and upgrade their target prices to be higher, more and more investors will get interested in this company and will buy the stocks of this company. By this, the price of the stocks will get higher and everyone will benefit. If you find this information interesting, press a like button and subscribe to our channel. I am very grateful to all of you who are doing that. But besides analyst target prices, there are other things and other positive catalysts that we might discuss. And one of them is record loan origination trends. As all of the SOFI investors know, and if you just got interested in this company, listen carefully, SOFI is crushing it when it comes to loan originations. In third quarter 2024, they achieved record numbers. Here on the slide, we can see that it was never higher. Their total loan originations reached $6.3 billion, and SOFI CFO Chris Lapointe were really proud to announce these numbers on the UBS Global Technology and AI conference that took place earlier this week. He explained that out of that $6.3 billion, $4.9 billion came from personal loans, also the highest figure SOFI has ever recorded. Student loans, an area that was hit hard during the federal payment pause, bounced back significantly, delivering their best quarter since early 2022. By the way, if Trump rolls back federal student loan program, SOFI could benefit big time. With less space for forgiveness and stricter repayment plans from the government, more people might turn to private lenders like SOFI to refinance loans or get better deals. SOFI's flexible options and tech-savvy approach makes it an attractive choice for young people who are looking for alternatives. However, SOFI should be aware about risks like people struggling to pay back these loans in a tougher economy. But still, this could be a great chance for SOFI to grow and to re-establish their position in the student loan market, because if I remember correctly, at the beginning of their journey, SOFI were called Social Finance, and it was actually a company created by students for students to help them with their loans. And if I'm not mistaken, they were the first ones who in general introduced this student loan refinancing. By the way, if I'm mistaken, I will write it down on the screen, but I don't think I am. I think they were seriously the first one to introduce this after they lost some part of it, and right now they have a great, amazing chance to get it all back and maybe even to grow some more. So this could be a great catalyst for SOFI in 2025. Another important piece of news is SOFI recently had the best mortgage quarter since 2021, which is a big deal given the challenges in the house market. I'm very curious to see what will happen in 2025 when the interest rates will be cut and the demand for mortgages will rise. Another very important factor to take into account is financial services and technology. SOFI is aiming to be this one-stop shop for you. Basically, what it means is that they're planning to give you all of the possible financial services that you might think of. Basically, if you want to take a loan, they will offer you a loan. If you need a credit card, they will make you a credit card. If you want to invest, they have investing platform, so you got the idea. Over the past year, the company has dramatically shifted its revenue mix, and now nearly half of its adjusted net revenue comes from its financial services and technology segments. As SOFI's CFO said, in third quarter, our technology platform and financial services segment comprised 49% of the overall total adjusted net revenue in the quarter. As a reminder, we have guided the street to having about 50% of revenue coming from those two segments and 50% coming from lending. So we're well on pace to do that. This is huge for a couple of reasons. First of all, SOFI is not anymore dependent on the lending that can be cyclical, and it's heavily dependent on interest rates. Right now, when we expect the rates to drop, it's not such a big deal. But SOFI had been through some very tough times when the rates were high, so now they're trying to do anything in their powers to avoid it. So instead of lending, they're generating more stable income from Galileo, their technology platform, and from their financial services. The problem is, as I'm mentioning in all of my videos, is that the technology part of SOFI is not growing that fast. We saw that a major chunk of this growth, of this 49%, comes from financial services and not from technology. And SOFI is struggling to bring new clients to their Galileo business. I wanted to hear some explanation from the management, and I actually got one. Let's read it together. In tech platform, we're really opportunist. We feel really good about where things stand with potential customers. We haven't lost any deals, and the pipeline is as robust as it's been in terms of the client selection process. We feel good about the continued momentum both on the processing side as well as new deals that we're signing both in the bank side as well as other larger consumer brands. So basically, this answer is not really clear to me. They're perfectly happy where they stand with potential customers, but from the other side, the CFO of the company decides to highlight the fact that they're not losing any already closed deals. I'm sure that they are closing some deals because after all, their tech platform revenue is growing. But I'm very eager to see some new big customers and some real growth in this segment of their business. From the other point of view, the tech sector works in a way that today you've got no customers, today you've got no revenue, tomorrow you go sign some big client and you suddenly become the leading player in this sector. So basically, I very much hope that this is what will happen to SOFI and that they will work harder on this matter. Meanwhile, in financial services, SOFI's momentum is undeniable. In third quarter, they added over $2.4 billion in member deposits, bringing their total deposit base to $23 billion. These aren't just any deposits either. Over 90% come from direct deposit accounts, making them incredibly sticky and reliable. With this kind of funding, SOFI can continue scaling without relying heavily on more expensive options. It brings me to another important point. SOFI's deposits not only growing, it's actually transforming SOFI's profitability. By funding approximately 85% of their loans by deposits, SOFI has lowered significantly its funding cost, which directly boosts their net interest margin. In third quarter, their net interest margin was 5.6%, and they expect to stay about 5% going forward. I'm telling this because in a rising rate environment, the ability of SOFI to maintain such strong margins shows us smart pricing strategies and efficient operations. And if rates drop in 2025, we could see these margins improve even further, giving SOFI an advantage over their competitors who rely on more expensive funding options. So the positive catalysts for SOFI stock are: first one is their ability to grow their lending business. The second one is this diversification strategy that we already talked about. And the third one is, of course, new administration and new policies. We already hear the news for 2025 about rate cuts. We already hear the news about student loans. And of course, if the rates will be cut, the mortgages will become very popular again. So basically, I do not see any negative catalyst for SOFI for 2025 right now. Although I must mention that we need to keep in mind that rates were high not without the reason. And Biden's student debt relief was there also not without the reason. So all of these changes in policies are bringing substantial risks, and the time to pay for this will come, but the only question is when. In my opinion, the consequences won't show themselves until a few years later, so I think SOFI is safe for 2025. Of course, no investment is without the risks, and one of the biggest wild cards for SOFI is the movement of interest rates. If the rates won't be cut by as much as we expect them to be, for example, SOFI stock could actually go down. Now let's get to the stock of the company and what is our investment plan. Right now, SOFI is trading at a premium valuation. Their PE ratio is 120 when the sector median is about 14. And they're much more expensive compared to their competitors, although it's important to mention that their revenue growth year over year is also much higher than its peers. But the stock market is absolutely crazy right now. Look at Palantir, for example. The company was overpriced when it was twice cheaper than it is right now, but the people are continuing to pump this stock because they love it and because they believe in it. And now the interesting fact about SOFI. Their short percent of float, or how much out of all of the stocks of the company are being shorted, have decreased by more than 8% over the last months, which is a significant decrease. It shows that people are becoming more and more positive regarding SOFI. It shows that people are liking this company more. And together with all of the catalysts that I mentioned in this video, and together with the fact that investors are very ready to invest in overvalued stocks that are trending right now, it's obvious that we won't be selling SOFI stock right now. We decided to hold it and to see what the future will bring. In my opinion, we might witness SOFI crossing $20 line and even $25 line in 2025. But I want you to understand that we are not buying more as well. I would be buying more if company will show some nice results in their tech segment, but for now they are basically a lending and financial company. They are a nice company, they are a fast growing company, but they are overvalued compared to other companies that are earning their money mostly from lending and financial services. Besides that, could SOFI go down? The answer is definitely. The stock price of SOFI is dependent on gazillion factors that can play out differently. For people who like to look for breakouts and to look at the graph, I can say that we've passed something like 3 legs already on SOFI if we're looking at the volumes. So by all of the rules, right now must come some consolidation or some pullback, even if it won't be the big one. If the pullback comes and I will decide to buy more call options or stocks, I will make another video for you. So not to miss it, don't forget to press the like button and subscribe to our channel. As always, write a comment. Write what is your position in SOFI, for how much you would sell or for how much you bought, or just come around to say hi. I very appreciate those who do. Thanks for being with me. I hope to see you on our channel next time. Happy investing!